Want to know if a stock is being overbought or oversold with volume included? Then meet Money Flow Index or the MFI, one of the most underrated tools in technical analysis. Let's break it down with simple terms. The Money Flow Index is a momentum indicator similar to the RSI, but better. Why? Because the Money Flow Index combines both the volume and the price. It tells us how much money flows into the stock and out of it. It ranges between 0 and 100. Above 80, it's called overbought. The price may reverse or pull back. The Money Flow Index or the MFI is great at spotting divergence, a powerful reversal signal. Let's say the price hits the lower low, but MFI forms the higher low. This is called as bullish divergence. So what does this mean? This means selling is a losing steam and buyers might step in. Now, flip it. If the price hits the higher high, but MFI dips, then this is called bearish divergence, and a drop may be coming. You can also use Money Flow Index to confirm breakouts and breakdowns. If price breaks resistance and the MFI jumps above 70, that is strong buying momentum. If price breaks support and the MFI falls below 30, then there is strong selling pressure confirmed. If the MFI is greater than 80, then that is overbought and watch for reversal. If the MFI is less than 20, then that is oversold, then watch for bounce. MFI rising while the price falls, then that is bullish divergence. MFI falling while price rises, then that is bearish divergence. MFI greater than 70, which indicates a strong buying momentum, then this confirms a breakout. MFI less than 30, which indicates strong selling momentum, then it confirms a breakdown. Now let's see how is Money Flow Index calculated. First, find the typical price, that is high plus low plus close divided by 3. Multiply that by volume, then you get money flow. Separate positive and negative flows, then plug it into the formula. MFI is equal to 100 minus 100 divided by the sum of 1 plus money flow ratio. You don't have to worry with these complicated equations. The charting software does the math for you. To get the most out of MFI, use the 14-period setting, that's the default and works the best. Combine it with RSI, MACD or Bollinger Bands for better accuracy. Always backtest on the historical charts and the practice is key. Let's look at a real-world example of an overbought and a divergence scenario. Let's say a stock jumps from rupees 150 to 200 and MFI hits 85. That means it's overbought and a correction could follow. Or maybe a stock drops to rupees 100 and the MFI rises from rupees 18 to 25. Then this is called as a bullish divergence. Well, a bounce could be ahead and sure enough the stock price rises to 120 rupees. The Money Flow Index gives you the power of volume plus price in a single tool. Whether you're looking for breakouts, reversals or hidden momentum shifts, then MFI is your go-to. If you found this video helpful, then give it a like and share it with a fellow trader and follow Navia Markets for more such information.